Hey, everybody, this is George Moorhead. And, it's really funny because we've been talking about a lot of different market, basically trends, what's been going on with mortgage rates, looking at everything that, well, really at the end of the day, has been giving real estate a big guff. In fact, mortgage rates, it's kind of like those swells, 7 foot waves that you have to fight just to try and get a really good rate. And people are always looking for those calmer waters. And so we're going to be able to, well, we're getting a little bit of that relief. And so with that, let's talk a little bit about what the market's doing, where we're going, what to expect, and best how to navigate this. But in the meantime, make sure that you subscribe, share, and like, because early at the end of the day, this allows us to be able to, well, help everybody, or at least help as many people as possible with making the best business decision for them, for their families. Look, there's no cost, there's no selling here. Make sure that you subscribe. In fact, some people laugh because they say, smash the subscribe button. And again, it just helps with the algorithm to allow things to happen. Anyway, meaning to happen, meaning to get out to other people who are really trying to make the best decision for their family. All right, so let's hit on to the next one here. The market. So as you can see, we've got 905 homes that came on market. That is, well, starting to head in a better direction. Why? Because we need about 1,200, 13, 1,500 homes coming on market. Because as you can see, we have almost 1,300 that came off. Now we have been looking at, the one home that comes on market, two homes go off. Because Friday is a big list day, we're actually seeing some of the that compressed a little bit. So we're seeing only, about a third, half of them coming off where, one is coming on. But that's going to change because, again, sellers have been pulling back, as you're going to see locally and nationally. Now, as we take a look at the next slide, as you can see, it's a very normal trend. So you can see that we're down to about 86% of the inventory of where we've had. Okay, so let me qualify this. It shows that we have 86% more inventory than we had last year at this time. Now, again, remember last year, heck, we only had 3,600 homes. That was a half a month of inventory, meaning that if we put a lid on the inventory, we had 15 days of inventory to sell. Right now, we're at about 1.6, 1.7 months of inventory. And when we take a look at our pending and our solds, well, you can see we're actually rallying incredibly well for having interest rates that were almost double. So when we take a look at last year, which was at 3,611, which we knew, we're at 6,359 right now. You can see that even in February of this year, we were 1.7, 1.3 months of inventory. That is very consistent with what we're seeing in March. And in fact, we've been drawing down that inventory from, as you can see here in October, we had 12,000. And again, these are single family only. July, we were at our peak at around 13,000. And that is still super low since we should be at about 16,000 homes. Right now, we should be about 12, 13,000 homes. As we get a little bit closer into April, which we're converging on that, we should jump up anywhere between 15, 16, up and as high as 22,000 homes. I know. And it is still super low. A balanced market is 4 to 6 months of inventory. But this appears to be the new norm because as even we go back, to 2015, 2016, you'll see that those numbers change, meaning that we have been drawing down inventory and we've never gotten back up to what was the average or normal before. So maybe this is our new norm. Anyway, when we take a look at new construction, look at this. This is awesome. Okay. Part of this, both locally and nationally, we're experiencing the same thing. So on the national level and local level, you can see that pending sales are up. Solds are lagging just a little bit, not uncommon. One, because of our interest rates, and two, part of that is seasonality. but our inventory is still lagging as far as new coming on market for new construction. But we are starting to definitely take off more homes off the new construction pallet. Now, as you can see down at the lower chart there, we have in October, we had 4 months of inventory, which that was getting about normal. Then we've since then, because rates, were coming back down off of the sevens and down into the low sixes, high fives, we started pulling down that inventory. And you can see we're at 1.6 months of inventory again. Bank-owned properties. So there's a report that came out that, there's more inventory coming on market. In fact, you could say, statistically speaking, there's 61% more REOs, bank-owned homes, on the market today than there was a year ago. Okay, well, that's 19 homes. That's nothing. That's peanuts. We have a total of 50, whereas last year we had, 31. So 19 homes different. But you can see that our inventory year to date is down, and you can see that, basically we're spot on for sales, and we're not a big foreclosure bank-owned property, discount area. We're one of the 5 sweet spots throughout the United States. And whether it's a credit union, a bank, or a trust, or whatever, who takes that property back, which 70% of them, 72% actually, are getting sold before they even become an REO. Those that do become a bank-owned or real estate-owned REO, those properties, well, they do the paint, carpet, and vinyl. They get it back out on the market, and they are getting market value for them. So there's really no discounts if you're that bargain hunter. If you want to bargain, hey, go back to the slide that has what the heck is it right here, where you see back on market. You see 100 homes back on market. Hey, there's an opportunity for you. Those are sellers that lost their buyer. Great opportunity for you to go in and capture that better property. Right now, let's talk about rates, because rates are the number one thing that are affecting the real estate and buyers coming in out of the market. We're going to hit on some national trends here, both with the National Association of Home Builders, some info from Redfin. But here you can see we've come back down to about 6.6. We were bopping up against the sevens there, but we're coming back down. Why are we coming back down? And you can see the highlighted section there. Okay, so we had some banks that did some failure because not because they were not financially smart, but I think they got just a little greedy when they were investing their depositor money into bonds, and not basically bonds, but munis, municipal bonds, treasuries. And when they had to cash those out early before maturity, they got bit because they got hit with there's fines, there's penalties for early withdrawal. And of course, to try and make up the run on the banks, which had they not done a run on the bank, would never have been an issue. However, nonetheless, that's a simplified version of that. Not saying that they didn't get caught up in some of the what we would consider some bad, I wouldn't say bad, but very risky commercial loans that once the Fed started raising rates, they were having problems with people paying commercial loans back. Some of them got caught with the electronic currencies and whatnot. Okay, we all make bad decisions at times, but did the FDIC react a little too fast? Probably. I think that they jumped in a little too early, like they did with WAMU years ago. Anyway, off my soapbox, let's get back to rates. Rates actually are doing very well, and as far as what they were doing a week ago. And when we take a look at some of the Redfin comments here, it says, look, hey, let me open this all the way up. It says some home buyers are returning to the market as mortgage rates decline from a 4-month high and reaching last week. Daily average mortgage rates dropped from 7% to about 6.5%. Okay, that is pretty much what we were just talking about. Rates have been coming back down. They have been improving. We've been seeing a significant increase in buyer activity, both on a local level and a national level. So when we come back here, said sideline buyers reacted quickly. U.S. mortgage purchase applications increased by 7%. but overall home buyer demand remains tepid. Okay, so absolutely it does. And the reason that it remains tepid is because there are still people that are just still, hey, what do we have as far as concerns for employment? What do we have as far as concerns for interest rates and other costs since inflation, even though they're giving some indications that inflation is leveling or coming down a tad bit, there's a lot of mixed messages out there. They're just people that are just a little bit concerned, especially when their grocery bill is up 22% year over year. All right. If we take a look, it says buyers pounced. I love that. Buyers pounced when rates fell because they are so volatile now, which shows that there's plenty of people waiting in the wings. I absolutely agree. Chen continued to say that the Fed's goal is to meet their Fed's goal for the meeting next week is a balancing act between fighting inflation and keeping the banking system intact. All right. So the banking system, sure. Look, the banks, they pay out on checking and savings accounts a very low rate. They can only invest at a very low rate. Now, did they kind of overextend themselves as far as getting into the municipal bonds, getting into treasuries, and then have to pay penalties to pull cash out because of a run on the banks for pulling money out? Sure. Had those people not come in and done a run on the bank to pull, money out of the bank, would there have been a significant issue? The answer is no. That is, when you have another bank that is bailed out by 11 other banks because of what they have, or, basically the end of the day to maintain, the validity or the liquidity of a bank. Hey, is it a solvable thing? Sure. Do we just, continue and pull things back into perspective? Yes. However, we'll see what the market does with that. All right. Anyway, it says while the unrest in the banking system may lower rates back and bring back some buyers, for most of the country, people are going to have a little bit of a reservation. And again, that's what we just talked about. Completely normal to have that reservation based on not just the banking. Banking is one element of it. It's kind of the big picture. The administration is not being, I think, as forthright and as honest and kind of putting their head in the sand in some areas. Hey, but that's what they want to do. And that's fine. People will respond accordingly. And it is, again, still a fabulous time to come in and look at securing homes, especially in our area, because we're not seeing the values coming down like, well, some of the other areas nationwide. All right, let's get back to this. So when we take a look at the next slide, it says new home construction surged in February as builders sought to take advantage of tight existing home inventory. This is a national level. New single family starts rose 1.1% from January, which is a big deal because the builder sentiment has been down. Now, granted, year over year, those applications are down 31.6%, but all things considered, we are seeing some positive trends. We're starting to see the new homes that are coming online at an increase of 13.8% month over month. Again, less year over year. And it says one of the drivers behind home builder sentiment is the lack of existing home availability. Now, we've already talked about the fact that we don't have a lot of existing home availability, which then people do look at new construction. New construction is offering some incentives, not necessarily in price because they need to maintain price support of their plat. However, they're offering you incentives as far as upgrades, buying down rates and things like that. So there's some other really great opportunities. Remember, last week, we read that report from Fairway Mortgage that said, listen, those folks that are thinking that they should wait for rates to come down, which they're taking 1-2 years to adjust, we're still seeing appreciation. So that cost variable is going to be higher by waiting than it is then to do a refinance later. So keep that in mind, especially if you're looking at 2-1 buy downs as far as coming in and securing a home today, where, well, even though we've seen a lot of multiple offers, there are still some absolutely amazing pricing out there with different home sellers. So keep that in mind. Again, for those, hey, I'm looking for a deal. Hey, look at the folks that didn't sell. Look at the folks that that lost their buyer. There's great opportunities there for you to consider, and I know that the sellers would love to have you. Anyway, so everybody, let's get back to this. So when we take a look at our next slide here, you can see according to the National Association of Home Builder, this is the Wells Fargo Housing Market Index, since everybody needs an index. Home builder sentiment on the market from newly built homes for single family rose 2 points to 44%. All right, well, we knew that. The key thing is, given recent instability, concerns in the banking system, and volatility of interest rates, builders are highly uncertain about the near medium term outlook. So remember, unless a builder is using private money, they are using banks. And remember, when the feds raise rates, and we have what's called prime plus, prime is the Fed rate, and then the plus is the profit margin that a bank will look at. If builders are now looking at increased interest rates and more aggressively than what mortgage rates are for an average homeowner, as far as cost of funds, they may end up having to bring in money to add liquidity back into a project unless they're able to turn product over a little bit faster. So that is going to give, on the national level, even on a local level, a little bit of pullback from builders as they are releasing different products. And sometimes they'll let a plat sit because it is cheaper to let it sit than it is to start negotiating that term. All right, so when we get back, here's the big one. You ready for this? Single family home building permits for the future construction rebounded in February. Okay, we just went over that. Home builder confidence is improved for the third straight month. Good news on that one. Purchase applications rose 7% last week and may even have a bigger increase the week after the price drop. Okay, now we are expecting rates to continue to come down just a little bit. Again, remember, as we see a lot of volatility in the market, people do move their money more into bonds. As the bond rates increase, then mortgage rates come down. And so that is kind of a double-edged sword. So we need to keep that in mind. So make sure that if you're right on the fence of locking in, make sure you're watching that daily rate because it goes up and down multiple times during a day. Keep that in mind. In the meantime, there you go. You ready? Remember to like, subscribe, smash that subscribe button, and I will see you guys on the next video. It's absolutely stunning outside. Have an absolutely beautiful day and a great weekend. And if you have any questions, make sure to ask, and we will get those answers for you roughly about 30 minutes, except for on Sunday. But anyway, I'll see you on the next video. Take care.